So my name is Mike Akrawi. I'm the founder of Clever Community Development. We are community development here in San Diego. Our goal is to help the Middle Eastern Chaldean community to give them more education regarding housing, learning how to do the financial literacy and saving money to buy houses and to get qualified for loans. And same thing with the banking sector. It's very important to learn how to work with the right banks. And my question is, can you tell me what's the difference between like the big banks and the community banks? Maybe you explain it better to the people.
Sure. I mean, I think there's probably 4,000 banks in the country, and Mechanics Bank, we're, just to put it in context, $17 billion in assets. We have 112 branches throughout California. We are the 66th largest bank in the country. The top four, the B of A's, JP Morgan's, Wells, I'm missing one. Citi, yeah. The top four.
It's shrinking, but it's still there,
yeah. $1 trillion in assets, right? They're, I think, between the four of them, maybe 50% of the market share. So you have these large, dominant national banks, branches everywhere, and they have so many deposits that they don't want deposits, right? They've got asset caps where they don't want to pay you any interest. They say, I have so much here, and they're very, very, very heavily regulated, and they make a lot of money. They've been beneficiaries of some of this crisis because of the flight to perceived strength, and they have giant budgets to invest in technology and IT, and so they have very slick mobile apps and other interfaces with their consumers, and so they do very well. They're very active. They do a lot of good for the communities, but they're fundamentally different business models than the local community banks. Where again, we're the 66th biggest. There's thousands of banks that are very small, that are 100 million, 200 million in assets, that have a few branches in local markets. And what's challenging for these small banks is that the regulatory